Hi, it's Marcus here, and I want to teach you something today, which is, what is the stock market? Might seem a simple question, but actually a lot of people don't know what the stock market is. What is the stock market? Well, you'll be surprised to know it's a market for stocks. But kidding aside, what does that actually mean? It means that there's a private company which then decides to do something called an IPO. Now, you might have heard of this. This is an initial public offering. And they go into the market and they cut up the business into different shares. Okay? And then you can buy one share, and that means you are a shareholder. And what that does is it allows you certain rights. For example, you could go to the annual general meeting. And if you bought a share in Berkshire Hathaway, for example, you have the right, even with just one share, to fly all the way over to the States and to listen to Warren Buffett, one of the legends of investing in the long term, talk about what his thoughts are in the market. If you wanted a one-on-one with Warren Buffett, by the way, it will put you back $2 million, which he gives to charity just for lunch. I don't know who pays for lunch, but I guess at $2 million, it doesn't really matter. So once you do the IPO, you then cut up that company there. You are a shareholder, and that, like I said, gives you certain rights, but you are, I guess, hoping when you buy this thing to make money when the price goes up. Now, the price doesn't always go up because we're in a market, and therefore the price sometimes goes down as well. So all we're looking to do in the stock market is to choose those stocks that we believe won't go to zero. They are solid stocks. We do our fundamental research. I'll be doing another video on what the difference is between fundamental research and technical analysis. But we do our fundamental research and then we do our technical analysis on that stock to make sure that we don't get in too high, because everybody else, let me tell you, in the stock market, they do the opposite to what we do. What they do is they wait till the market goes nice and up because, oh, it's going up, therefore we're going to get in. Guess what? They get in at the maximum amount of danger. That is exactly where you shouldn't be getting in, right? That's where most people get in. And then guess what happens? It starts going down. And it goes down and down and down and down, and then they bail out down here. When everybody is selling in the stock market, that is the maximum point of the best time to buy, of financial opportunity. That's where we get in, the professionals. That's where we get in, right? So when everybody else is panicking, that's where we start buying. And when it starts going up, guess what we start doing? We start selling. That's where everybody does what? That's where everybody starts getting in. Of course, we're going to be selling to them. So this is just the way it is. It's no kind of like big conspiracy theory or anything like that. It's just that people get really emotional when things go down and they sell. And when you sell, other people see it going down even more, so they sell and they panic, they panic, they panic, panic. That is the time you should be buying. And when it's going up, when everybody else is buying, that's the time you should be selling. So if you wanted to know what is the stock market, I'll tell you what it is actually. It's a way to transfer money from people's pocket that don't know what they're doing into the pockets of the people that do. That is the stock market.